Congratulations! You found the Sand to Pearls Stock Market Commentary for June 28, 2015. Market breadth. With this past week's market decline, our bull-bear point and figure ratio was unchanged at 0.93, remaining within slightly bearish territory. The total count of securities in bullish or bearish patterns fell 2% to 3,109. The count of bearish stocks decreased 2%, while the count of stocks in bullish patterns also decreased 2%. The Sand to Pearls PNF Market Breadth Summary Chart shows us a market now 5 consecutive weeks in bearish territory. Paid subscribers have access to the OpenOffice Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on Membership, and clicking Register. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 39 points for the 11th rise in 21 weeks. At a positive 27.58 points, it continues below all 9 tops above plus 100 and above all 4 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in distribution mode. In the last 2 weeks, the Nasdaq had 2 accumulation days and 4 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Nasdaq ended in distribution mode. Momentum. The extreme behavior of the CCI 20 daily continued, touching plus 200 this past week before declining to plus 11.15, now within the range for a zero-line reject long entry should the market advance early this week. In Woody's CCI trading system, 6 consecutive bars above or below 0 are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 49 weeks ago, while the daily CCI 20 began a Woody's uptrend 10 weeks ago. The CCI 20 weekly continues in a Woody's uptrend and at plus 121.71 remains outside the plus or minus 50 range for a valid zero-line reject long entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish, S&P Retail continues in the top 5. Brokers has left the bottom 5 and re-entered the top 5. Gold and silver continues in the bottom 5. Oil services has entered the bottom 5. Bearish, computer hardware continues in the bottom 5. Disk drives has entered the bottom 5. Networkers, REITs, and semis have left the top 5. Focus this week from www.thedailycoin.org. The global credit market is now a lit powderkeg by Brian Pretty, Peak Prosperity. Some key points follow. 2015 stands in relative contrast to a largely upward stock and bond market movement over the past 3 years. What's different this year, and what are the risks to investment outcomes ahead? I think the markets are attempting to, quote, price in, end quote, the first interest rate increase in close to a decade. Bond yields, interest rates, rest at generational lows, and prices at generational highs, levels never seen before by investors. Forward bond market price risk has never been higher in the experience in the investment community of today. An asset class that has almost always been considered safe is no longer, regardless of what happens to stock prices at any point in time. For a global market that has risen at least in part on the back of confidence in central bankers, this type of volatility we have seen in longer-term global bond yields as of late implies investors may be concerned central bankers are starting to, quote, lose control, end quote, of their respective bond markets. All eyes should be on the global credit markets. So much capital is stored there that if it starts flowing out and likely to the sidelines, that is, safe havens, prices for everything are going to be impacted. Life under higher interest rates, high prices, debt defaults, moribund markets. Remember the 1970s? The ghosts of the past are about to return, joined this time, though, by the specter of a collapse of the $700 trillion derivatives market, which, if it happens, will make the 70s look like the Roaring 20s. Thank you for tuning in for this week's Santu Pirls Stock Market Commentary, featuring the proprietary bull-bear point-and-figure market breadth summary chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend. Hoping that you are also looking forward to a wonderful week coming up. And wishing you, as always, true success.